What does it take for a company, in a really crowded tech market to not just survive, but to consistently lead
Mhm.
and innovate, even when facing, well, significant headwinds? We're talking about a company that helps you run your best marathon, fly a plane with serious precision, explore the deep wilderness, or even navigate your boat across open water, all with incredible tech. Today, we're taking a deep dive into Garmin Ltd. We'll be exploring its recent performance, its strategic vision, and what analysts are actually saying about its future.
Yeah, and we've pulled together quite a stack of sources for this. We've got Garmin's latest financials, the Q2 2025 earnings call transcript, recent news, analyst reports, the works, really. Our mission here is basically to cut through all that noise, pull out the key insights so you can quickly grasp what really matters about where Garmin sits in the market today.
Okay, so if you only know Garmin for maybe those old dashboard GPS devices from, what, a decade ago, you are definitely missing a huge part of the story. Let's unpack what Garmin Ltd. truly is now. It's way more than just GPS, right?
Oh, absolutely. You're spot on. Garmin designs, develops, manufactures, markets, and distributes this huge range of wireless devices globally. They've really diversified. They operate across five pretty distinct and highly specialized segments now, each with its own, frankly, incredible product lines.
5 segments. Okay.
Yep. First, there's fitness. This is probably their most visible one,
Yep.
with the popular running watches, multi-sport stuff, cycling computers, activity trackers, smart watches, and their platforms too, like Garmin Connect, Connect Mobile, and the Connect IQ app store. It's a whole ecosystem.
Right, the ecosystem.
Then you've got outdoor. This covers everything from those rugged adventure watches and handheld GPS units to specialized golf tech, even dog tracking and training systems.
Dog tracking. Didn't know that.
Yeah. And moving into more specialized areas, aviation. This is where they've made massive strides. We're talking integrated flight decks, basically whole cockpit systems, plus electronic displays, navigation, communication systems, advanced flight control, safety tech, portable GPS for pilots. A lot.
Wow. Okay.
And marine. Chart plotters, multifunction displays, fish finders, sonar, autopilots, radars, VHF radios, even advanced trolling motors now.
So really, everything for being on the water.
Pretty much. And finally, auto. This might surprise some people. It's less about the standalone GPS now and more focused on embedded computing, infotainment systems for car manufacturers, PNDs still exist, and cameras too.
That is an incredibly diverse portfolio.
Right.
Seriously. So in an age where tech companies can, rise and fall so quickly, especially in tough areas like wearables or auto, what gives Garmin its edge? How do they stay competitive across all these different markets? What's the secret sauce?
Well, what's really compelling, I think, is this concept of their narrow economic moat rating that analysts give them.
Okay, the moat. What does that mean in practice?
It's not just about having good products. It's about their consistent, almost relentless innovation and product differentiation. It's core to what they do. This whole approach lets them not just lead new categories, but also command higher prices, premium prices, because their stuff offers unique value. You see it clearly in fitness, outdoor, aviation, and marine. This continuous pipeline of advanced, specialized devices, that's a key competitive advantage.
So innovation is key. What else?
Well, beyond just the products, they've built really strong intangible assets. Think about their brand. It's highly reputable. And they have these deep, long-standing customer relationships. Like, for instance, they've been recognized for 10 years straight as a top supplier to Embraer. That's a major aircraft manufacturer.
10 years. Wow. That's loyalty.
Exactly. And importantly, they're actively expanding that ecosystem we mentioned, growing subscription and service revenues. Think about InReach for satellite communication when you're outdoors, off-grid. Or Garmin Connect Plus for advanced fitness metrics, aviation content subscriptions. These services create stickiness, Makes it harder for customers to just jump ship to a competitor once they're invested in the Garmin world. Adds switching costs.
That's right. Gets you locked in a good way.
And all of this, it's underpinned by substantial ongoing investment in R&D, research, and development. They spend a lot to stay ahead.
Okay, so we've seen what Garmin is, this diverse tech powerhouse, and how it defends its position with innovation and that ecosystem. Now, the big question, is it actually working financially? Their Q2 2025 results just dropped. What do they tell us? What stood out?
Well, put simply, it was an outstanding quarter, just really strong. Consolidated revenue surged 20% year over year. That's a record $1.81 billion.
20% growth. That's huge for a company their size.
It is. And even more striking, maybe operating income jumped 38% to $472 million. And pro forma EPS, earnings per share, rose 37% to $2.17.
Wow. Okay, so top line and bottom line firing.
Exactly. And what really highlights their broad strength is that all 5 segments saw double-digit revenue growth. Every single one.
All 5.
Yep. Fitness led the charge. Massive 41% gain. Auto OEM was up 16%. Aviation 14%. Outdoor 11%. And marine 10%.
That's incredibly balanced growth.
It really is. And it wasn't just one region either. All 3 geographic areas, EMEA, the Americas, and APAC, they all saw double-digit increases too.
Okay.
Plus, you saw a healthy margin expansion. Gross margin went up to 58.8%, operating margin to 26%. That suggests, strong pricing power and good cost management.
Those numbers are undeniably strong. Efficiency gains alongside that impressive top-line growth. But, in tech, things move fast. Is there any element here that feels like a one-off, or is this momentum sustainable? What's driving this?
Yeah.
Any new products or big moves?
That's the key question, right? Sustainability. And it really seems driven by a sustained wave of innovation, not just one-hit wonder. For example, just recently, end of July, they acquired MYBES. They're a global leader in timing and performance analysis for sports. That's going to definitely boost their fitness segment.
Strategic acquisition. Makes sense.
Yeah. And in fitness itself, they launched new forerunners, the 570 and 970. That ultra-thin Venu X1 with the 2-inch display, that thing looks amazing.
About that one.
An index sleep monitor, a Tax Alpine gradient simulator for indoor cycling training, even a VariView bike headlight with a 4K camera built in.
A 4K camera and a bike light.
Okay, yeah, they're not just making small updates, they're really pushing new capabilities. Then for outdoor, we saw the Instinct 3 edition, now has an AMOLED display, metal bezel, LED flashlight, and interestingly, dedicated support for rucking.
Rucking, like hiking with a weighted pack.
Exactly. It's a niche but growing activity they're clearly targeting. Plus, new tread all-terrain navigators.
Got it. And aviation, that's always a high-tech area.
For sure. They introduced the G5000 Prime integrated flight deck, added FAA datacom capabilities to their GTN 750 Savai navigator, that's for digital communication with air traffic control, launched smart charts. They also got Autoland certification for the Cirrus SRG7 Plus series. That system can land the plane itself in an emergency. And new DME products, which help pilots with navigation. It just shows their continued leadership in a really demanding industry.
Okay. Impressive on the aviation front. What about marine and auto?
Marine saw new GPSMA chart plotters, the 15x3 series, the Quadix 8 smartwatch, purpose-built for boating, a Descent S1 smart buoy for dive safety, and the Force Current kayak trolling motor, pretty innovative.
Kayak trolling motor, okay.
And on the auto OEM side, maybe quieter, but still significant, they shipped their 1 millionth domain controller to BMW. That's a central computer managing lots of in-car functions.
1 million to BMW alone. Wow.
And software-wise, the Google Maps app is now available on compatible Garmin smartwatches, so expanding that ecosystem appeal again.
Right, integrating with other major platforms.
Now, looking longer term, management sounds very optimistic. They use the phrase, more work to be done, which I always think is a good sign, shows ambition. They strongly believe in the utility and growth potential of health wearables, and they feel they're gaining share there. They're also strategically pushing those subscription and service revenues in reach, Connect Plus, aviation content. That recurring revenue is key.
Definitely. More predictable.
And critically, they're committed to investing heavily in innovation and infrastructure. Full-year capital expenditures projected around $350 million.
So they're putting their money where their mouth is on R&D.
Absolutely. Oh, and interestingly, on smart glasses, they're kind of taking a wait-and-see approach.
Yeah.
They still emphasize the strong, proven utility of watches.
Interesting perspective on smart glasses. Okay, so those results are impressive. Management sounds confident. How did this stellar quarter impact their full-year guidance? What are the key numbers listeners should be watching now?
Right, the guidance. They raised their full-year 2025 revenue guidance pretty significantly, now expecting approximately $7.1 billion. That's up from $6.85 billion before.
That's a decent jump.
It is. And pro forma EPS guidance also got bumped up to $8 per share from $7.80 previously.
Okay.
Margins look pretty stable in the forecast. Gross margin expected around 58.5%, operating margin around 24.8%. So similar to Q2 levels. Now, one small detail to note, their pro forma effective tax rate is expected to increase. up to 17.5% from 16.5%.
Why the increase in tax rate?
It's due to U.S. tax law changes related to how companies capitalize R&D expenses. So it'll have a slight impact on their net earnings, but it's an external factor.
Got it. So mostly positive updates on guidance, but always important to look under the hood. What were some of the maybe concerns or challenges discussed on the earnings call? Even strong companies face headwinds.
Absolutely. That's a crucial question. One main headwind is operating expenses. They are projected to increase for the full year.
Okay, why is that?
Several reasons. Headcount growth as they expand. Foreign currency impacts specifically. The strong Taiwan dollar increases their product costs, although overall FX effects were actually favorable for revenue this quarter. Acquisition costs from MWANS, and increased performance-based compensation because, well, they had such a strong quarter.
Right, got to pay for performance. Makes sense. What else?
Another point analysts are watching is inventory levels. They increased quite a bit, up to $1.8 billion. That's up both year over year and from the previous quarter.
$1.8 billion in inventory. That sounds like a lot.
It is, and it actually reduced their Q2 free cash flow by about $91 million. Now, Garmin describes this as a strategic move.
Strategic how?
They say it's to support strong customer demand and also to maybe mitigate potential future tariff increases, get ahead of it.
Okay, so a calculated risk.
Exactly. But for investors, the so what is that it ties up a lot of capital. And if demand were to suddenly soften, that inventory could become more of a drag than an advantage. Something to watch.
Definitely something to keep an eye on.
Yeah.
Any other areas of concern?
The marine market conditions were described as, quote, a little bit towards the downside and facing some uncertainty. But Garmin did note things seem to be stabilizing, and crucially, they feel they're gaining market share there through innovation.
So even in a tougher market, they feel they're outperforming.
That seems to be the message. And while the auto OEM segment did post an operating loss of $10 million in Q2, that loss actually narrowed compared to last year. So it indicates progress and maybe better efficiency in that segment, even if it's not profitable yet.
Okay, so improvement even with a loss.
Right. And finally, Garmin was pretty clear that channel fill, basically loading up retailers with new products, was not a big factor in Q2's strong results. And they don't see signs of retailer stockpiling.
Meaning the demand seems real, not just pulling sales forward.
Exactly. It suggests the growth is more organic and perhaps sustainable.
Okay, that's a lot of moving parts. Strong performance, innovation, but also these strategic investments, higher expenses, inventory build, some market uncertainties. Given this complex picture, how are analysts viewing Garmin's valuation right now? Is the market, fully appreciating this whole story, or maybe overappreciating it?
Yeah, this is where it gets really interesting, potentially a disconnect. The stock price, as of the report date we looked at, was around $221.49.
Okay, 221 cents.
But a prominent analyst's fair value estimate for the stock was quite a bit lower, around $168.66, and their specific price target was $212.53.
So the stock price is actually above both their fair value estimate and their target price.
Correct. Which suggests the market might be fully pricing in all these positive developments, maybe even anticipating more aggressive growth ahead than some analysts currently model. The stock might be seen as fully valued or perhaps even a bit expensive by some metrics.
Right. So let's break down those analyst views. What are the bulls saying versus the bears?
Okay. The bull analysts, they point straight to that consistent innovation track record. The robust financial performance, record revenue, record EPS, raised guidance, double-digit growth in all segments. You can't argue with those numbers. They also emphasize the expanding ecosystem, those growing recurring revenue streams, Garmin's strong market positions, and those deep customer relationships, like the Embraer one. Basically, fundamental strength and execution.
Okay, that's the bull case. What about the bears? What are their concerns?
The bear analysts, they focus on that premium valuation concern we just discussed. They also highlight the increasing operating expenses and that strategic inventory build, which, as we noted, impacts free cash flow.
Right, the cash flow impact.
They also point to lingering segment-specific issues like the auto OEM loss, even though it's narrowing, and the general uncertainty clouding the marine market. Plus, they factor in those external financial headwinds, like the higher tax rate and the stronger Taiwan dollar pushing up product costs.
So valuation costs and specific segment risks seem to be the main bear points.
That sums it up pretty well.
And what about insiders, the people closest to the company? Any interesting trades by executives or board members that might give us a signal?
Yeah, there were some notable insider trades back in Q2 2025. The CFO, Douglas Boson, sold some shares on July 3rd, around $215. And the president and CEO, Clifton Pemble, he also sold shares multiple times in June at prices around $203.
Okay, some selling by top execs.
Yes, though it's always important to remember people sell shares for lots of reasons: personal financial planning, diversification, exercising options. It doesn't automatically mean they lack confidence.
True, context matters. Anything else?
Interestingly, one director, Jonathan Burrell, gifted a large number of shares, 308,000 back in June. A gift, not a sale.
A gift, okay.
Overall, if you look at the stats for Q2, the insider buy-sell ratio was 0.81. That means there were 13 purchases versus 16 sales during the quarter. So slightly more selling activity than buying among insiders recently.
Okay, interesting data point. Well, what an incredible deep dive into Garmin. We've really seen a company that seems to be firing on all cylinders, record Q2 results, relentless innovation across so many different areas, and a really strong, optimistic, long-term vision.
Absolutely. Yet we also dug into the nuances, right? And the financial complexities, those strategic investments that lead to higher expenses for now, the significant inventory build impacting cash flow, and crucially, a valuation that suggests the market might have already factored in a lot of this good news, which leaves some analysts, a bit cautious.
It really brings us back to that core question, doesn't it? What truly stands out to you when you weigh Garmin's proven, demonstrated ability to innovate and execute against its current market valuation and the ongoing challenges every dynamic company inevitably faces?
Yeah, and that brings us to a key thought for you, the listener, to consider in your own analysis. How much weight do you personally place on a company's demonstrated track record of innovation and market share capture, especially when its current stock price seems to already reflect pretty high expectations for future growth? It's this fascinating puzzle, isn't it? Fundamental strength versus market anticipation.
If you found this deep dive helpful, please do hit that subscribe button and don't forget to ring the bell icon. That way you won't miss our next analysis and it really helps support the channel. Thanks for joining us on the deep dive.